My colleague Anurag caught up with the Managing Director Amit Jhingran to break down the numbers. Let's take a look at what was said in that conversation.
We are very happy that our results have been in line with the guidance that we had provided at the start of the financial year. That was 14 to 15% of IRP growth and a VNB margin growth of 26 to 28%. Our results, particularly on the individual rated premium front, have been exactly in line. We have grown by approximately 15%, and that is in line with the industry growth also. Having said that, when we consider the overall new business premium, there was some group business which was more than the normal business of the company, and because of that, the product mix, overall product mix, got a little bit skewed, and that has resulted in a little bit of lowering of margin in the overall front.
Overall, yes, sir. So, sir, going ahead for this financial year, VNB margin target would be around 28% or some change in that guidance?
So, we have given a guidance of 26 to 28%, and I believe that going forward, as the contribution of IRP in overall rated premium improves, we will move towards the upper range of our guidance that was given at the start of financial year, that is 26 to 28%.
Okay. So how product mix is changing? Is the focus also shifting toward the non-par product more, and which also will help going ahead in increasing your margins?
Yes, I am very happy that as per our strategic plan, where we had indicated that our non-linked portfolio will be focus area, and in last couple of years we have introduced very good products in non-participating, guaranteed assured kind of product, participating products, and also in the protection product the portfolio has been strengthened, and we are very happy that the growth rate in all these three lines of businesses is much better than ULIP. Having said that, ULIP being the looking at the financial environment in the company where a lot of new investors are coming and investing in the equity market, ULIP continues to be a strong growth area for the company, but our other lines of businesses are giving much better growth rates.
So the share of ULIP has decreased from 57% to 46%, mainly due to?
This decline is mainly due to increase in the group business, but even on the IRP front, individual rated premium front, the overall contribution of ULIP has come down to around 63% during the quarter. So other lines of businesses in the individual segments are also improving at a better rate.
And sir, you just said that pure protection is also picking up. So now how much the pure protection contribute to your overall new business, and how is the growth in pure protection business also?
Our protection business in the individual segment has grown at a rate of 21%, but within the individual protection also, the pure protection, you are aware that we had a very good contribution of return of premium protection segment also. But in last 1 year, our growth rate in pure protection is much higher at around 40% in this quarter.
Okay, which include both group and...
Not group. I am talking about the individual.
Individual.
On the total protection fund, including group, our contribution is around 10%.
Okay, 10%. Okay, sir. Sir, I just was going through your numbers. Expenses has grown up by 34%. Commission expenses also grown up by 18%. So what actually contributed to this?
Commission is growing in line with the growth in the rated premium only. So our commission as a percentage of gross written premium has been constant at 4.4% during the quarter. Having said that, the commission also depends on the product range that is being sold. So with the change in product mix, obviously there is some change in the commission outgo also.
Okay. So, sir, going ahead, so what will be your target for the product mix? Which segment you're targeting up to that certain mark?
We are looking at a non-linked portfolio of 37% for the year and 63% of ULIP. And our first quarter sales have been in line with that.
Okay. And sir, one more question I want to ask you on the persistency front. Persistency for the 61st month is down from 63% to 58%. So what contributed in this, and what kind of efforts you'll be taking ahead to improve the persistency?
Persistency, if you look at the various buckets, I am very happy to share that we are in a very sweet spot. If you look at the 13th month, 25th month, 37th month, 49th month, all across these four bands, the persistency has improved, which is much better than the industry trend. The 61st month persistency has shown a drop, and if you notice the persistency movement during last 4 years, this particular band has been moving, and we call it COVID band because this was booked during that COVID period, and this had affected our 49th month persistency last year. This year it has affected our 61st month persistency, and as it moves out, by the year end, the 61st month persistency will also show a good growth.
Okay. Sir, Banca share, if I talk about the distribution part, the Banca share is at 47% from 58%. So which other channel has improved, and it is also deliberately that you want to be Banca light going ahead, or other channels should also grow at a faster pace?
I will not say that we are growing towards Banca light. SBI has always been our strength. It will continue to be our strength in the future also. But having said so, we have identified opportunities on the agency side. We have been strengthening our agency channel by opening more number of branches, by employing more agents, by focusing on their training, etc., to improve their productivity. And that has resulted in a better growth on the agency channel front
Other
also.
sides, yes.
So going forward also, while Banca will remain our strength, our agency growth will be better than the Banca.
So what is the at present mix? 47% is Banca. How much would be the agency and other channels?
47% that you are talking about is on the
APE
total APE basis. On IRP basis, our Banca is around 62% as of now, and agency is around 30%.
Agency is around 30%. Sir, just want to understand how much of your new business is contributed through the Credit Protect, that bundled product which is offered with the loan?
Number one, it is not a bundled product.
Okay.
Our Credit Life portfolio is mainly sold through SBI branches and mainly in the housing loan segment. The attachment rate in the housing loan portfolio of State Bank of India is less than 50%. So it is not a bundled product. It is a choice of the customer. Of course, it is a win-win situation for the bank, for the customer also, because in case of any financial emergency, the credit portfolio, the asset created by that credit is protected for the family of the customer. So it is a very important product, and going forward, I believe that with the kind of spending that the Gen Z and Gen X is having, taking more credit, it is very important that they safeguard that credit portfolio with a credit light product also.
So how much it contributes to your new business, sir?
Overall, it is not much. I cannot quote the percentage offhand, but it is less than 10%.
Less than